Hey traders, welcome to you. So we are part 5 now of a multi-part video series where we are talking about developing patience and knowing when to trade. If you haven't seen the other videos, go and check them out. Start on video 1, work your way through. We're trying to keep this really quick. We'll kind of run through it all, quick overview and stuff. Make sure you are subscribed for more in-depth stuff coming up. Let's get going. So we talked about how we can predict people under normal circumstances. I don't think I can predict people's behavior under all circumstances, but I do think I've got a better chance of predicting people's behavior under certain circumstances. You think about the stress that's put on you from a losing trade, the max loss, the max capitulation, you can kind of guess it. I guess an analogy would be, all right, someone's walking down the street. Are they going to go left? Are they going to go right? You don't know where they're going to go. Now, if you had a gunman standing there on the right, 90% of the time, 99% of the time, they're going to go to the left. Extreme example, but the point is if there's some kind of influence put on them, then you can make the decision prediction a lot better. I believe you've got a better edge. So putting that kind of stressor on them in the market. So look at this kind of slide I've got for you here, guys. When the market does this, what are the traders feeling? All right, just have a look at it now and just see this from a long time ago. Doesn't even matter that it's the actual price. It's been chugging along quite nicely. All of a sudden, wham, and you can see that multiple candles to the downside. Okay, so really, if you're thinking about that, you're kind of analysing and going, yeah, you know what, the bulls are in pain. Yeah, they don't like it. They've seen that extreme move. They do not like it. They do not like the fact that this thing has suddenly fallen through the floor and it's got no sign of recovery. It's been sitting there for a while. It's kind of done massive damage to the position relative to the trade that we saw beforehand of how much movement. Again, it's all relative. There's an air of panic, right? Longs are panicking. Longs are thinking, what's happening? You know, they're starting to think, you know, what's happening here? Why is this happening? Why did it drop so suddenly? You know, what if it's really serious? What if this is kind of something that hasn't hit the news wires yet? You know, I might be margin called. I've got quite an aggressive position on now. I haven't got much room before, you know, I'm starting to come out. And they start thinking, you know, their mind starts thinking about it. You know, there's alerts coming. They're looking at it. Why has it done this? They start looking for a reason, justification as to why. There's fear in the blood. There's fear flowing around them. There's concern. There's worry. Generally speaking, not all, we're generalizing here, but there's a concern. And so you have this thing where there's a lot of unknowns. People then also start to think of the worst case scenario, don't they? Start thinking, well, this thing, what if this thing completely falls through the floor? What if they go bust? What if this? What if that? What if, you know, it's this, it's that? It's going to, you know, they start to think of the catastrophe, the worst case scenarios. You know, imaginations are running wild, and every kind of, you know, second it's sitting there and they kind of pause and it goes lower and they pause and they go, oh, I don't know what to do. And it goes lower and then eventually just panic out of it. Right? So that leads to emotional order flow. Okay. Now, whether or not you're trading for a bounce back up or whether you're trading for a continuation, that's a kind of another decision to make. But the important point is, guys, is that emotional order flow gives us an opportunity. When a trader is prepared to sacrifice price in order to get in or out, in other words, they want a time rather than price. They want to get in immediately or out immediately, prepared to pay anything to do that. That's when opportunities present themselves to you and I as retail traders. When people are acting rationally and carefully, like their quiet market environment, nothing going on, they're not interested, right? They're just placing orders, waiting for the market to come to them, there's no problem. When we see that, or we saw that slide earlier, that dramatic drop, the whole game changes, right? Bulls are now thinking, oh dear, I need to do something. I am under pressure. I need to do something. So when we have that, we have emotional order flow. This gives us opportunity because we can start to trying to guess what people might do from that. We can start to think, well, actually, there is opportunity because people are much less concerned about price and are more concerned about getting in or out. And when people are doing that, that gives us a little bit more edge. It's an opportunity to trade. Now, I'm not saying that we should be trading during every spike. It's purely an example. I'm not saying that we should wait for stuff to spike, but I'm just showing you the point that when that happens, put yourself in the position of a long trader. you've got a reasonable long position on, and that happens, what do you think? You start thinking, what's going on? So the emotions start to be heightened, and then as someone trading counterparty to you can take advantage of that, can take advantage of the fact that you want to get out, whatever, because you're concerned you're concerned about losing more money than you are about getting out of the fair price. You just want to get out. You might hit a market sell order, in which case a person who perhaps is buying the flush is going to get a bargain price or not, or someone maybe selling as a precursor for that is going to ride that wave. You get the point. All right, guys, so let's go to the next video. I think we're on number 6 already, where we're going to look at some sort of quieter environments, look at how the market's feeling, and then compare the two. Stay tuned for that one, guys. Bye-bye.